Does a property tax deed affect your credit score? That's a great question. We're going to dig into that on this video. As we all are very aware, your credit score affects everything that you're doing, from not just buying a car and a house, but it could even affect your job. So I think this is a very important topic to talk about. And specifically, do tax deeds affect your credit score, but other things around that also. In this video, we're going to talk about tax deeds and your credit score and what to watch out for on that. There's a lot of layers to this also. We're going to talk about effectively using your credit for all sorts of things. Business credit, lines of credit, HELOCs, all of those things. It's so important. The credit system has evolved dramatically just in the last 15 years, and we're going to talk all about that in this video. So let's get right into it. Before we do, as we all know, hit the likes, hearts, buttons, bells, subscribe. But most importantly, if you have a question or a comment, just put it in the comments down below. I answer all of those. But let's get right into this. Do tax deeds affect your personal credit if you have one? Yes and no. So there's a couple of double-edged swords on this. It's not like they're reporting to the credit bureau. So let's just backtrack a little bit. Let's talk about, the Equifaxes, the, TransUnion, all of those out there. These are private companies selling information about you. The regulations in the credit bureau industry out there are immense. There's a Fair Credit Reporting Act of 1985, and then there's several that have just dogpiled on top of that. So I want you to think about this. There is a private company that's selling information about you. Where do they get that information? There's twofold. Either it's reported to them, like let's say Visa or MasterCard will report that, or Ford Motor Credit or Bank of America on mortgages, what have you. They say this is what they're pinging it against that. And it's gotten very sophisticated with all this, here's a big word alert, algorithms. So there's actually a lot of predictability when it comes to looking at a credit, looking at the whole situation of the individual, okay? But a credit bureau kind of paints a pretty clear picture on that for the mass of what we're using credit for. So one of the things you need to know is understand literally what your rights. Somebody's selling information about you that somebody else is giving them. A lot of regulations there. So let's unpack this a little bit. Let's talk about tax deeds. So when somebody get a tax lien against their property, it is public information. Just like if it goes to a tax deed sale, it's public information. The county is not going to go and report that to anybody out there. That's just not, number one, in their purview. It's not in their bandwidth, job descriptions, or budget. So you think about this. Every time somebody has some kind of a credit issue with the county, somebody at the county would have to contact the bureaus and make that happen? No, we're gonna kind of harvest that one a little later on. So that's probably not gonna happen unless somebody from the credit bureau is harvesting that information, and that again is not really what they're looking for. There's just not enough of it out there. So I wouldn't worry about it. But can it? Yes. Will it? Probably not. More importantly is just your credit in general. It's kind of that double-edged sword. They're selling information about you that might not be as accurate. There could have been something in your past that happened, maybe some medical issues, maybe there's all sorts of things that could happen, okay, to make your credit bad or good. And sometimes it's not, I'll just say the words fair, so to speak, the way it's done, because they don't understand the circumstances around that. I get that. So there's two ways to look at it, is hope your credit score is good or actively take control of your credit. I prefer that one. So let me give you a little bit of my history. Just coincidentally, way back before I started doing tax lien certificates, I had a friend at a company that I worked at, a big one, okay, New York Life, and he was sharing with me that he wasn't able to get a car because he had bad credit. And I'm thinking the guy made a lot of money. I'm going, how could you have bad credit? He said, I had a bad divorce, this and this and that, and things got ruined with it. And I took it upon myself to start doing some research. And that's when I found out about these Fair Credit Reporting Acts and all this other stuff. So I realized that, first of all, the credit bureaus, Equifax, they're not some government agency. A lot of people may or may not know that, but they're not. They're a private company selling information about you. It's almost slanderous in some ways. So the regulations against them are pretty immense. And I started reading these books on it. This is before the internet and all that good stuff. And I started looking at this going, wait, this doesn't make sense. So understand you're right. So what it is this. If the credit bureaus report something about you, they have to actually prove it. Okay, so it's upon them, not you. The onus is on the credit bureau agency. So think of it as three parties. You've got the credit bureau, you've got yourself, and you've got, let's say, Visa. We'll use Visa for this example. So Visa says, oh, they're late. So they say, okay, they're late. It comes up on the credit bureau. And your job is to look at that, and you can do this and say, hey, highlight this item. This is incorrect on my credit bureau. And they says, well, tell me your version of the story. And you're like, no. You have no obligation to tell them anything. So they have 30 days to investigate whatever it is that you've highlighted on there. Let's just call it a 30-day late payment on it. That's not mine. Please take it off. So they are obligated by law to investigate that. And their investigation consists of only saying, hey, MasterCard, they said they're not late. Now, MasterCard has got to get them information saying that they were late within 30 days. And if they don't, they have to take it off your credit bureau. So it becomes a little bit of a tug and war on that. Now, this doesn't mean going out there and getting a bunch of credit cards or mortgages, not paying them, then get it eliminated off your credit bureau. What I'm saying is you can take an active role in it because there are mistakes all the time. So I'm going to give you a little, go back to New York Life and my buddy over there. He had 114 derogatory items on his credit bureau, and we got all but 9 removed within 4 months. Okay, so that's kind of my fix on the whole thing. And, you know, I used to actually put a lot of this into some of my training out there because your credit's so important. It's gotten a little different now with all the digital stuff, but not much. The rules are still the same. Okay, again, whether it's yours or not, you can highlight it and say, please take this off my credit report. It doesn't belong to me. You send them your copy, your driver's license, your social security number with a signed document on that, a letter on that. It can be handwritten, and they have to do this. They have to get that going. And it's effort. There's a lot of effort in this, okay? And so this isn't some kind of a strategy to go out there and eliminate things so that you can run up bad debt to make it happen. You're going to realize how important the credit bureau has over you because of what you were denied before that. Either that or a high interest rate, unfavorable loan agreements, denied on a particular property, and then you start going, oh my gosh, this really does affect me. So you will start taking that a little more seriously if that's what you. But if there's something that's happened in the past and you're going to look at, that's just not me, that was years ago, it's really easy to start. It's called a challenge. Just challenge the credit bureaus, and I'm telling you, you will have some success on it. There are a lot of companies out there that will help you with this. All over the place. Matter of fact, I'll put a couple in the link down below that I've referred to people, very reputable companies out there. And again, they'll say the same thing. Hey, we're not taking stuff out there that belong. We're taking stuff out there to correct and get your score up. So what is a good credit score? Your credit score to really function in the United States, you know, it needs to be at least 720 or higher is in the good range. Anybody that has 800, I call them unicorns. It means they're probably not using their credit at all. And so, you know, anything over 720, once it starts getting below 720, something's going on. Somebody may be reporting something. Somebody, your credit could be overextended. So let me give you an example. If I've got 5 credit cards and they're all right at the top of their maximum amount allowed, that's going to affect my credit score. Okay, so there's some tricks around that also. So you can either pay those down so that they're not right at the top, at least 10% below that, or you can go on to NerdWallet or creditcards.com, go to any one of those websites and start looking at credit card options out there. They want your business. So what you can do is get a new credit card, okay, and transfer the balance that is less than the limit that they have over here. Or a better solution would be to call the credit cards that you currently have and say, hey, I love doing business with you, and I want to increase my credit limit by whatever it is. That'll automatically show that you have more balance available and reduce your numbers. As weird as that sounds, you got more credit, but your credit score goes up. Doesn't make sense, but because you're topping at the top of there, they're going, okay, he's at the max of his credit, something might be going on. That's the computer talking. So keep that in mind. The other thing out there is this, the whole credit card game, you guys. I love this. I love the credit card game. Okay, if you don't have 5 or 6 credit cards that you're playing games with in this industry of doing real estate, you're really missing the boat. So let's talk about partnerships. your most expensive partner is going to be somebody else. So if I go do a deal with you and you and I split that, I just lost 50% of my money. Okay. But if I go do a deal, let's say that I buy a property, it needs $50,000 worth of rehab, and I got two credit cards that are giving me, I don't know, who cares, 12% interest, whatever, and they're $25,000 a piece. I fund that whole rehab on those credit cards. I only make a couple payments on that. Who cares about the interest rate? So it's like buying lumber. I'm looking at the cost of that credit. So I borrow $50,000. It costs me $2,000 or $3,000 over a 6-month period of time. I pay the thing off. That's a lot better than splitting the deal with somebody. Okay, so you should have a stack of these in your wallet. And then also, I think it can be in your backpack or wherever they are. Also, the other thing you want to do is play the game against them. They have these 0% credit card offers, and they'll transfer balances. And so I'll call up my credit card companies and go, hey, I've got a balance over here. You know, Chase wants to give me a brand new credit card, and they're giving me points and all this other good stuff. And then a lot of times they'll say, well, we'll honor that, or maybe they'll lower the rate or increase the deal. They want your business. Here's how they make their money. Believe it or not, credit card companies don't make it off the interest rate, although that's a bonus. It's swiping. That's how they make their money. Okay, 2.5% every time somebody swipes a card. I can't snap quick enough to how many times that's happening. The billions of dollars that this is creating on an annual basis is staggering. Okay, I mean, this is just a huge, huge amount of money. I mean, you look at that pandemic, and this isn't conspiratorial, but they got everybody to believe that money was going to get you sick, so they got you to start using the credit cards. Okay, I wonder who thought of that one there. So look, it can be adversarial or it can be a teamwork. I like to be a teamwork with it. You look at your credit score, make sure that it's accurate, okay, and do the things that you need to make happen, but also use it as a tool. There's all sorts of things we can talk about in that. And here's some more things. Every single year, you can pull a credit bureau on you for free. Now, be careful on how you pull your credit score. There's what they call a soft pull or a hard pull. You don't want to do hard pulls. That will affect your credit, not as much as it used to, but if they see a bunch of credit inquiries on there, it will affect your credit bureau because they're going, okay, what's he doing? What's he doing? They're trying to get some credit on it. So be aware of that. Listen, there's a lot of information here, and I've got some great free training. So all you got to do is hit higginsmethod.com, and I've got a brand new training specifically designed to help you get financial freedom for you and your family. Just hit that down there. And when you register, I'll give you a free book that I've put out, America's Secret Investment Strategy. That's my gift to you. This is Saen Higgins saying God bless and good luck.